Don't expect any changes in rates or stance just yet, but watch out for the macro forecasts with a potential GDP growth upgrade on the cards, according to a CNBC-TV18 poll. There's also an expectation that RBI is going to signal that it will keep liquidity comfortable. Now, if all of this comes true, it is going to be bullish for stocks. 60% of our respondents said that they are going to focus on RBI's growth and inflation projection, with others highlighting that they're going to watch out for any signal that the stance could be shifted towards neutral, or if the tone turns a bit more hawkish given the exuberance in the system which RBI has been highlighting. No one is expecting rates to be tinkered with in this policy. In fact, most of our respondents are also expecting the stance of the policy to be left unchanged at withdrawal of accommodation, with just about 10% expecting that RBI will prepare the markets for a shift in stance going ahead. The first rate cut is only expected in the October policy later this year by most of the respondents, with some expecting it by August, but no earlier than that. On the liquidity front, the respondents largely expect RBI to signal comfortable liquidity. Now, since the last policy, liquidity conditions have eased and RBI has been actively managing liquidity with multiple interventions at both ends, and participants expect that RBI will continue with this and also reiterate its preference to stay nimble with market operations. The inflation forecast for the current fiscal is also unlikely to be changed just yet. Now, while vegetable prices continue to remain volatile, the RBI could find some comfort in the softening core inflation. But on the growth front, half of the respondents are expecting an upward revision, with the domestic growth data remaining robust. The RBI is expected to raise the GDP growth forecast for FY25 anywhere between 7.1 to 7.5%. As per 50% of our respondents, the other half are expecting it to be left unchanged. As to how the governor will sound, absolutely even is the broad consensus. So rates on hold, stance unchanged, some tinkering in the macro projections are the expectations that we are going into this policy with. Of course, the governor's comments in the press conference later about recent regulatory measures, for instance, against financial entities, the larger message from those are also things that we are going to keenly watch out for.